Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. We got an excellent show lined up for you today. I'm Harvey Freed, and good morning to Becky Alley.
Hey, what's up, everybody? Welcome to the Hardcore Mortgage Show, and it is pretty brisk out there, man.
It's gorgeous outside, though. That sun is shining.
I love this weather. It's finally like hoodie weather. I like it.
This is it. Fall is in the air. Lisa Lawson joins us from Capital Mortgage. Hey, hey.
Hello, everybody. How you doing?
Or at least you bring us this fine guest, of course, Hope Williams. Good morning, Hope.
Good morning, everyone. How are you?
All right, fantastic. You joined us on the podcast. You're awesome. You got so much information to share with all the buyers and sellers out there. What's going on in real estate and mortgages? That's what we're going to give you. And if you want to call in, 248-539-9797. Becky, home buying season continues on again. The temperature changed. It's not a state where we, again, are putting it on the sidelines. Now, I don't know about this year's Christmas season. We're going to talk a little bit about that. How do you feel things are setting up here with this gorgeous fall day?
I think that we're not going to really see that slowdown. That I feel like people are always going to be buying houses. And I feel like right now that the ones that are out there, we're looking at serious buyers. The rates are not keeping them on the sidelines because they're understanding the wealth of home ownership. And it's more important, more so than ever, when they're right now, they're getting those rent increase letters, for the first of the year. And, they have X. So now they're like, I have a client right now. They're like, I have 2 months to find a house because my rent's going up to XYZ in January, and they understand that. And we've had many conversations that they know that the rates are a temporary moment in time, like we've seen over and over again, and these opportunities for them to save money will come, but at the same time, they're investing in themselves. And I feel like there's a lot of listeners, new buyers out there that are really understanding that the rates aren't really the issue. It's really the rent that they're paying.
248-539-9797 to get things going right here. Home prices are sort of stabilizing here in Southeast Michigan. Again, those hot houses, Hope, they go quickly. So it's really nothing different than the last 2 years, the pandemic, the fear of missing out. You better be prepared to buy a house in today's market.
Right. I get calls from folks who want to look before they pre-approve. And that's one of the things that I, as an agent, just will not do. Absolutely not. So if you are interested in a property, your best bet is to get pre-approved and always prepare yourself. Even if you feel like I'm just looking, because the worst thing is to get inside of your dream home and you can't have it.
Oh my gosh, I call that the hungry eyes syndrome. And shout out to Jessica. She's a longtime listener of the Hardcore Mortgage Show. I actually spoke with her yesterday, and she listens to us when she's driving on Saturday mornings, wherever her destinations are. And she said, I want to start the process. Is this how I start it? Because I hear you guys talking about it. Do I talk to a real estate agent first? Do I talk to you first? And I said, you talk to me first. I go, because if you talk to a real estate agent, they're going to defer you to a mortgage lender. If any real estate agent that's worth their salt is going to direct you to a pre-approval, because you're absolutely right, Hope. The worst and biggest disservice someone can do for themselves is fall in love with something that they cannot attain right now financially. And it's good to set those boundaries, because right now affordability is key, and making sure who can afford what and making sure it's comfortable. The rates might be up, Lisa, as we've talked about before, and their payments might be a little bit higher, but at the same time, it's all about that affordability and making sure that you're not having to come in 30,000 over asking. So there still are really good deals out there right now.
Absolutely. Just to reiterate, it's more than just falling in love with a house and finding out you can't afford it. Falling in love with a house and not being ready to make an offer. So, you go to this, call an agent, and agent's like, oh, there's agents who will show you the first house without getting an approval. They're like, I'll show you the first one, so you can get your feet wet. You fall in love with it, and now you want to make an offer, except you don't have any of your documents ready. You didn't file your tax returns yet because you filed an extension. You've done nothing to get yourself in the position to actually make an offer. So by the time you send me your documents and find out where everything is and realize that you have to file your tax returns, someone else has already made an offer on that property, and that offer's accepted, and you've missed out.
We're going to talk about that, how that all really transpires your whole life, right? What you do with your credit when you're 21, 22, 23, all of a sudden you're buying a house at 26, and you better have that credit score up. We'll talk about preparing yourself for that all for, boy, oh boy, the first-time home buyers out there. They had the 2 years of the pandemic buyer, Hope. It was a rush. That was a whole different offer. Again, Becky mentions those bad days when you had to pay 10, 20, 30 over. Now, home values went up. That doesn't look so bad, especially when they're sitting on those low interest rates. But today's market, it's different than the pandemic now, a little bit different.
It is a little bit different. And that's why all the more reason you need to be prepared. And I want to piggyback a little bit on what Lisa was saying. Even though you may feel like, I'm not ready now, you want to take time to prepare yourself for the future, because you never know when that shift in your mind is going to happen. I have personally been on the other side and went out looking for a house, wasn't planning to buy. And guess what? I fell in love. So you want to do your due diligence, and you want to make sure that you're not in a situation where you're being rushed into a bid and you haven't thought through what your next life looks like.
Oh my God, that is so relevant.
Yes.
So absolutely relevant. I actually because we talk to so many people sometimes that it kind of misses, and what you're saying is a very specific moment in time where I have a call coming in from someone. The real estate agent referred me. They went to an open house. They just were walking down the street, one of those things. They called me. Now they really, really love this house. And now we're kind of working backwards because it's a higher price point where the credit score is. They're FHA. FHA has a max loan amount limit, so you can't exceed it. So that now equates to them having to put $100,000 down. Well, now they're not truly a contingent buyer, but for that kind of down payment, it is. So now you're absolutely right. They've done themselves a disservice in a sense where they just creaked open the door and they're like, this is my house, this is it. So now we're all scrambling to try to work backwards and make this work. And so definitely to that point, and so you almost have to just don't even close your eyes to it unless you're ready for it, because we're going to part the seas and we're going to make it happen as quickly as we can, but it's now has them in a little bit of a stressful situation.
We also say don't let that noise interfere with that great plan. Again, home ownership's you're not buying the car. The car might be in your life for a few years, maybe not even. This is completely different. This is really building communities, and we're going to talk all about that also this morning. Come and join the show, 248-539-9797. Hope Williams, Keller Williams Advantage here locally in Southeast Michigan. She handles all of your real estate needs. Again, if you want to get in touch with Hope, call us at Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. We'll get you set up with Hope and all the great agents all across Southeast Michigan. And also talking about some collaboration we have with so many different great agents all across Southeast Michigan.
Well, Hope right now, I just want everyone to know that she is all of the good vibes, right? We're all about aligning ourselves with the highest of the best people, and she's a good person, right? So it's one thing for you to have a professional in your pocket, but to actually have a person that is good and really genuinely cares and
compassionate.
Compassionate and all those things. So Hope is that. So if you're out there and you're looking to buy and you don't know where to start, give us a call today. We're here and we're going to get you in contact with Hope because she is...
Her name says it all.
Yeah. That's right? So true, yeah.
I mean, your name says it all. For someone who is wanting to be a homeowner and maybe they've tried before and they couldn't make it work, maybe they had a lender that didn't guide them and say, look, these are the steps you need to take. Maybe your credit needs a little work. Maybe your debt to income's a little too high. This is what I see your next step should be. We can help you through that process. So yes, it may be that you aren't buying a house next month. Maybe it's going to be 3 months from now or 6 months from now. But Hope and I have worked together many, many times where that's been the case, where we've talked to someone and say, look, not now, but in 60 days, or not now, but in a month.
Yeah.
Or
it's not if it's when.
When,
okay.
correct.
It might not be right this moment, but it's when it's when, right? It's not if, it's when.
Right. And it's setting them up for future success. And I can attest to the integrity of Hope because we have a client right now whose expectations are a little bit possibly, I'm going to say, unrealistic.
Hungry eyes.
In today's market. And, Hope gave me a call and she's like, look, we're going to have, for lack of better phrasing, a come to Jesus conversation, because we want to make sure that this person is getting the best deal that they can, but everything that we're doing is in their best interest. It doesn't do anybody any good to get them into a home so they can be house poor, or to get them into a home so they don't have a penny left over. It doesn't, sometimes what they say, eyes are bigger than your stomach, right? And so Hope called me and she's like, look, this is what I'm thinking about doing. I'm thinking about having this conversation. I want to tee you up. This might not be exactly the right time, or maybe we need to redo it. But she had this very difficult conversation with them. And literally this just happened, I think it was earlier this week. This week this happened. And this is someone who's been looking for 2.5 months already and really, I mean, truthfully trying. But sometimes things just don't work out the way you intend. And having someone with integrity to say, look, this might not be the right path, or this might not be the right time, or that's a huge deal, And so I don't think people like Hope come around every day. And I think when you work with people who are honest, genuine, full of integrity, that eventually you're going to have a very successful transaction, whether it's now or a couple days, and a couple months from now.
All right, tons of information to share with you. We're talking about hungry eyes. It's like when you go to the grocery store, you're looking at a house.
I love that song, by the way.
Oh, yeah, do you? Kim Carnes, we'll give her a little shout out, right? But no doubt, you get to the grocery store, all of a sudden you want that house, right? You didn't want to buy the house. Maybe now you do. Becky, you said the rent letters are coming. Rent's going up, folks. Keep it here. We'll show you how to buy a house. 248-539-9797. And the fastest breaks in radio right here. You got to tune to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. We are powered by Fairway Independent Mortgage Corporation. NMLS 2289, Equal Housing Lender. That's where you get a mortgage here from nowadays. Why?
And how do people call us?
Oh, here in the studio at 248-539-9797. You could drop that whenever you want, Lise. We have, the difference is the professionalism. We've been doing this a very long time. We didn't invent it. We're just spreading the word, and we've been educating and sharing knowledge with so many people. We call it collaboration. We've done this for several years, 23 years on the radio here, I'm proud to say. And again, if you need a mortgage, be sure to call us. You can get in touch with us. We'll give you the best advice. Generally speaking, there's no obligation. That's what I really hope more and more families do hope is they take advantage, not even pre-approval. I'm calling it the approval, because nowadays we're running these clients by and we're going ahead and we're getting them approved so that they can close real quickly on these new homes. Hey guys, before we go to you, let's go to this caller out there. We keep losing them. All righty. Well, we'll try that again. A little technical difficulty. Call back here.
Yes,
248-539-9797.
Yeah, we're here to take all your calls. We want to definitely hear from you. We've had a couple come through, but they're not making it back to us. So don't be shy. Get on the air, because what you have to say, someone else might be thinking the same exact thing, right? And this is the best opportunity for us to kind of just really be real with you guys, because I take a lot of pride in the fact that we've all been doing this, 2 decades at least, each of us. And, the knowledge that we all have in this room, it's a blessing to be in this position to actually get out there and let people hear what we got to say and help them in the home ownership process.
You know what, guys? We can go off to Brian out there. He is calling in. All right, Brian, thanks for... Oh, it's Keith. All right, Keith, good morning. Welcome to our show.
Hi, how are you? I was calling to see, do you have any programs for first-time home buyers to save money?
You bet we do. Boy, oh boy, where do we start? There's so many.
Yeah, we actually have quite a few. There's not really a first-time home buyer program out there that we don't have access to. It's just a matter of what you fit in and what you don't, right? Because these first-time home buyers, you got to think about it. when they're giving you this free money per se, it's like not exactly free, but you have to either fit in the box or you don't, right? So it's about, having these conversations, seeing where you're at, but between MIJDA, depending on where you're looking, you can get up to $10,000. You can be a repeat buyer if you're in a certain targeted area that they allow. We actually also have a conforming program that's a grant, which means it's forgivable. That's also really, really huge. And we've been allowing people to take advantage of that. So where are you kind of at in the process?
Keith, you there still? Okay, we lost Keith.
All right, we'll give you a call after the show, Keith, and we'll get really specific with you. Yeah.
Yeah, I wanted to ask him, too, did he just get the letter in the mail? Because there's no doubt about it. We see hope. A lot of, right now, that group of families out there, again, guys just graduated, women just graduated college. They rented their first apartment. Now they're sort of, what am I going to do here? And they go out and they see, a 1 or 2 bedroom apartment. They want $1,500, $1,800. People just quickly say, wait a minute, how do I buy my first house?
Exactly. And, excuse me. The thing that I tell people is that when you are renting, it's understandable that people have to make a transition when they graduate from college or whatever. But when you are renting long term, you're basically paying someone else's mortgage. You're putting 100% of equity in someone else's bank account and in their own home when that equity could be going in your own property. So take a step back and get in touch with someone like Lisa or Becky or Harvey who can actually walk you through the process and help you to understand what you need to do in order to become that homeowner yourself.
Got a couple topics that I always talk about is the home itself, because at the end of the day, whatever the mortgage, you can always change that. But this home, you can really change. I got my fill every Saturday morning. I get my fill of HGTV, which is fun. It's exciting. And, I just saw some of the different styles out there and stuff. What do you see that some of the families are looking for now, or some of your most recent buyers were looking for?
Well, it's funny because back in over 5 years ago, everyone was doing what we would call the open concept, right? Mm-hmm. But now everybody is now shifting a little bit more to privacy because of the pandemic. People want to have their own spaces. So they're thinking about grandma. And another thing is generational living, right? Because of the inflation. So people are thinking about, where will grandma be? Where will the kids be?
Yeah.
So that's another thing. And if you have an opportunity, to buy a lower valued property and modify it the way that you want, then you're able to put your own niche on it and kind of customize it the way.
And we offer programs for that. We have renovation loans that help people do that at the time of purchase. So you don't have to purchase it and then figure out where you're coming up with the money. That can be all part of one transaction. And there's conventional and FHA government type of renovation loans that we can help you with.
Yeah.
If the home's stuck on the market for a little bit of time, definitely that's going to open up some opportunities. All right, let's move off to a call here. We got Al calling in. Good morning, Al. Thanks for joining us.
Good morning, guys. How's it going?
Real good.
My question was, so I'm married. I have 4 kids. I've been renting apartments for the last 3 or 4 years. Apparently, I've never had a line of credit open, so I've never been able to build credit, but we're looking to get into the market to buy a house. How would I go about doing that in a time frame of a year?
That is completely doable, and usually I can get you there in about 6 months. Some of these questions answers will be very specific to your scenario, so we'll handle most of that off of air. But it's not that difficult to establish credit if you have no credit history at all. So if what you're saying is someone pulls your credit report and it just says insufficient credit and nothing comes up, the first step is to get a secured secured credit card. So you literally take whatever you want your credit limit to be. Say you want a $300 credit limit on a credit card. You're going to send that to someone who offers a secured credit card. They're going to give you a card with that limit. And what I'm going to tell you is to charge $20 of gas, because you can control that. You want a very, very, very low balance. Try $20 of gas, wait to get the bill. Then you're going to pay that bill off in full 100%. So you're never going to pay interest. Then you're going to, once that bill is paid and you realize it's a zero balance, you're going to do the same thing again every month for 6 months. The balance on that card should never exceed $20, ever. It doesn't matter that I don't want you charging $100 on it and then paying it half off. It doesn't work the same way. And honestly, in 6 months, you're going to have a phenomenal score.
So you could go from zero credit. This is what we're saying. You can go from zero credit if you don't have bad stuff out there. Establish a couple lines of credit, maybe just 1 or 2 of these secure credit cards. You might even be able to get a straight up credit card for $1,000.
Well, FHA now considers rental history in their underwriting engine starting, actually, this is October, starting this month. So we'll be able to add, like you just said, you've been renting an apartment. So we're going to add that rental history showing that you've been in that apartment.
DTE.
Yep, DTE will also report if you ask it to. There's a few things that we can do to add to build up your history in addition to the 1 or 2 secured cards. It doesn't take as long as people think. People think it takes years and years. It doesn't, but it's super important to do it right. If you don't do it right, and say you get a credit card for that $300 limit, and someone, quote unquote, has an emergency, and all of a sudden you've charged $280 on it, your score will tank because you have a brand new line of credit that you've maxed out. It doesn't work the same way. It has to be done right, but it does not take long. No. And we can help you with it step by step.
Go put 3 or 4 gallons in the tank is what you're saying, Lise. That's
exactly.
it.
Like everyone's like, fill up. I said, no, you have to put $20. And you can do that at a gas tank. You just stop the pump, right? It's very easy and controlled, but that is the trick.
I'm always the one that's like $20.01.
I am too.
Al, next year this time, we're talking about decorating the house for the holidays and all that fun stuff with Halloween, and that's really what it is for kids.
You and your kids could be decorating your
subdivision,
house.
man, with some children in there, and that's what it's all about, is building a community. Becky, I started in the parking lot with that today.
Yeah, you did actually, and so we really appreciate the call because it's something that you don't know how to do, but if you're doing, he's reaching out before he takes the wrong step, right? He's looking for that knowledge and that piece, and honestly, you don't have to have scores either. You can do non-traditional trade lines, like for example, like a cell phone bill, your DTE bill, your rent. You can actually use those in order to qualify mortgages as well. But Lisa and I are really big advocates, Harvey, as well, as establishing those credits, right? So that's why we always kind of lean into that a little bit, because you have to be just vigilant when it comes to protecting your scores, and I feel like a lot of people just don't have that knowledge. And I want to put this out there. When you're looking for a mortgage, because we hear a lot of this too, I don't want you to pull my credit yet. I don't want it to affect things. Okay, so if you're looking for a mortgage, there's a difference between a mortgage inquiry and a credit inquiry. So if you're going to Lowe's and Home Depot looking for a 0% credit, interest, that's going to have a different effect on your credit score than me looking at your mortgage, okay? A mortgage inquiry has less than 1% effect on someone's credit score.
1 to 5 points, depending on your total report.
Yes, depending on, and that's it, right? And so you're good. What's really going to affect your credit score is you missing payments, okay? Mm-hmm. Or going above your balance, okay? That's like your 35%, how it's going to affect it. So if you have a balance or a limit of $1,000 and you go to $1,050, now that is going to be detrimental to your score. So missing payments and exceeding your limits,
and
that
collections.
Is always, yes, and collections, yep. Those are always the worst things. So just if you don't know how to fix it, call us. If you don't think you're ready, call us. We will literally take the time to kind of run those analyzers and look at it, because that's what we do all day, because I was very fortunate to be educated on credit by my parents at a very young age.
Yeah, no doubt. I like that. At least get the credit figured all out right at the beginning of the transaction. Do it now in your life.
Yeah, everyone knows credit's my favorite. Everybody knows it.
Okay, so the other thing is, like, everyone's got the free credit apps, right? We
not
won't
the
name.
Same.
Well, it's not the same.
It's not that score.
No, it is not. So I want to say it again. What you're using to monitor, which is great, do that.
It helps with trends. It lets us know if your score is going up or your score is going down. So if someone all of a sudden knows that their score on these free maps is 720, but all of a sudden you look and it says 660, you want to investigate that. You want to know what's going on because something isn't right. Mm-hmm. So those free apps are excellent to show trend, but those scores are what they call consumer scores. Those are scores given to consumers, again, to help with trend, but it is not the score that is utilized to qualify you for a mortgage. Those are very specific. Fannie allows one type of FICO score between TransUnion, Equifax, and Experian. It's required to be used. So that's why when somebody who is applying for a mortgage gets their credit pulled, the score is different. Right. You can go to 10 lenders, and all of our 10 lenders will be the same. But if you go to any of those free reports or the ones that you pay for, those aren't going to be a true mortgage credit score.
Yeah, it's a good gauge, but it's not gospel.
Hope so much fun having those folks in the car. They got that strong approval letter. You've already talked to their lender. They're ready to go. Hopefully it's us. And more importantly, they're ready to make that strong offer. So it's all about that confidence and the knowledge. And now yours can focus in on the important stuff like that style of home that they're looking for.
The style of home that they're looking for. And
I want to hear about that.
And that's why I like to start out with my clients. Even if they are not completely ready yet, we'll talk about what is important to them. I like to get to know people because I consider myself a relationship-based realtor instead of a transactional realtor. So having those conversations, doing what we talked about last week, a buyer's consultation. It's so important because you may think that I'll just walk in and I'll magically know what worked, but you don't want to have buyer's remorse. You want to think through your lifestyle. Do I have kids? Will I have guests coming over the summer to spend the night? I had aunts and uncles that would come every year that were retired and they needed a place to stay. You may not be thinking through those things, and a really good realtor will help you through that process.
Yeah, that's so true. Like you got to see like down the road, right? Not just right in front of you. And you know, even when you're speaking about like where mom or grandma's going to be, I actually had a closing yesterday where it's a long-term client of mine, a friend of mine now at this point, and they have 4 children of their own, plus their parents are living with them, and they just bought a house under market that is literally going to be a gold mine once he's done totally renovating it, because this was their everything house, their generational house where he and his family and his parents are now living with them, are all going to be able to live happily together. And those are things that, you know, he saw that for himself, which is good, but it's going to be, I mean, once he's done renovating this house, it's going to be beautiful, but he was looking down the road. I need my parents with me. And right now I'm living in Farmington Hills and it is not working. We're on top of each other.
Yeah.
It's nuts. And that's when your emotions get involved. And he's like, well, you need space. So it's good.
That's the nuts and bolts of it. It always ends up being the house itself. All right, we're up against a little short break here. 248-539-9797. We'll come back with all your questions. Welcome back to the show. It's the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage bank. I'm Harvey Freed, Becky Alley, Lisa Lawson with our office.
Yes.
You can find us all week at Capital. That's where you're going to find tons of experience. We'll close your loan. You just tell us how many days we have to close it, and we'll get you done. Get that approval letter ahead of time. Then you're going to really be able to be in control of that closing date. We'll tell you all about it here. Again, 248-539-9797. Hope Williams, Keller Williams Advantage. Great real estate agent. Hope, you're so nice to deal with. And thank you for joining us again. We really appreciate it. We'll talk about the actual home itself because that's always the fun part. I like to get into it a little bit. Let's go out to these calls here and then we'll circle back. We've got Don calling in from locally here. Good morning, Don. Thanks for joining.
Hello, how are you?
Real good. What's your question?
I got two of them real quick. The one is about, like, your credit cards. I was told that if you cancel, like I have 4, there's no balance on them, but I don't use them. You know, they're just open, and I was told that if you cancel them, it makes your credit score go down.
That is correct.
And I was wondering how you can do, you know, I don't use them, so I don't want to have them, but I don't want to make my credit score go down by canceling them. And then the second one was, I just refinanced, and I get these, like, mortgage things in the mail about, you know, if you're to pay off your mortgage if something happened to you.
Mortgage life. Yeah, mortgage life insurance. Yeah.
Yeah. How do you know which is the best one to get?
Let me handle the mortgage life insurance one. All right, mortgage life insurance makes sense for a lot of different reasons. One of them is if someone was already sick, and because they don't always do the detailed health questionnaires, and you don't have to be tested for everything in the world. So that might be an easier path for some families. However, as each time you pay your mortgage down, that balance goes down. That's not the best value. We definitely want you to reach out to your insurance agent on that, because insurance agents offer that mortgage life policy. They also will go to a life insurance policy and show you the values of term life versus whole life. So definitely we'll give you a call off the air and maybe refer you to one of our local partners. Guys, on the other question with the credit, dropping those credit cards.
Yes.
Yeah, so I'll let Lisa can piggyback on this, but in a perfect world, they want you to have a mortgage, an installment loan like a car, and 2 credit cards that are never exceeding 43%, right? So if you have 4 and they're not, they're not being used, we can take a look at it to see if you closing out 2 of them, how that would affect, because sometimes if you're overextended, that also has this negative impact, right? So you want to make sure, though, you retain the ones that have the longest credit history. So if you have one that you've had for like 20 years, you want to make sure you keep that, right? But if it's one that's been around for 6 months or a year, that might be the one that you perhaps want to drop off. But I would actually, though, at the same time, make sure that you're utilizing the 2 that you are using. So you're keeping, right? Because you want to make sure that you have open, active credit. So that way it's a working, living, breathing thing. Our credit is a living, breathing thing. If you don't use it, you lose it, right?
It's called non-utilization of credit. You don't get the maximum points if you're not using it.
Yeah.
So maybe also check to see what the rewards are.
Make a purchase?
Yeah, and I'm telling this, it does not mean that you're paying interest. Everyone's like, well, I have to use my credit card. No, you use it, and you don't have to charge a lot. You wait to get the bill, pay it off. So you're paying off everything the minute you get that bill. Therefore, you're not accruing any interest. But if you don't use it, you will lose it. Sometimes they'll reduce your limit, or the other thing is, like I said, you get dinged for non-utilization of credit, meaning you have open balances out there you just don't use. Open lines of credit you don't use.
Don, your final thoughts. Go ahead. I'll let you say something. Go ahead.
Thank you.
All right. Thank you for
so
joining
much.
us. All right. I like the question. Good stuff. All right. We're bouncing around a little bit there because he was in his car. Hey, windows are down. I can't hear him. How about that credit piece? Let me just go there a little bit. Yeah. So we got 4 credit cards. You take a look. Which ones have the better interest rates? As Becky said, which ones have higher amounts and have been open longer? So these are important things. If you drop 2 of the credit cards because you want to pay the $50 annual fee, that's okay. Maybe now you start utilizing the other credit card. Again, you say, Lisa, you're not paying interest on these credit cards. You're paying it off at the end of the month. If I go to the pump, it's $80 every time. Times 4, right, every week. You're at $300 some, whatever you might put in your pump. Pay that off. Use that. Use the gas component in your life to put gas in your tank to build your credit score.
For sure. It's easier said than done sometimes, because unfortunately sometimes emergencies happen, and that's why credit card debt exists, right? But I was always taught that you use it based off what you have in your bank accounts, right? So if you know you have $5,000 and you need to make $1,000 purchase, okay, well then you just use that credit card, you wait till they get that bill, and then you're going to use the money that you already had set aside anyway. And that is how you can build strong scores with great history without getting into trouble.
Correct.
Let's move on to, let's go to David out there. Good morning, David. Thanks for joining us. Go ahead with your question.
Yeah, good morning. I've got a question. I've got 4 credit cards, approximately $11,000 in available credit with 0 balance on any of them right now. I came into a little bit of money recently, and I paid off a financial institution about $8,000 because this albatross was on my back for 6 years. I'm just wondering, and my score hasn't changed. I'm wondering if I had made a mistake. I have a 100% payment history. But however, in 2016, I did declare a Chapter 7 bankruptcy on a house my late roommate left me. Your free credit scores show me over 722 on the free credit scores, but I thought it would go up after paying off this $8,000 loan.
The $8,000, was that a credit card or what kind of debt was that?
It was through One Main Financial. It was
installment.
I had a lot of it was up for the home. I had a lot of broken pipe issues, and I just got so tired of paying that monthly payment. I just paid the thing off.
So paying off an installment loan does not have the same type of impact as you would think, as in maintaining a strong payment history with revolving credit. So revolving credit makes about 60 to 65% of your credit score. That's a huge chunk. And mortgages, car installment loans, student loans make up the rest of it. But again, 65% is revolving credit. What you're talking about is an installment loan. It's not part of that 65%. It probably had an impact, but it's probably very minimal when you paid that off. Just because although they expect an on-time payment history, the balances don't play in the same way on an installment loan as it does on a revolving loan or open-ended credit.
Let me see. Second question, I think the caller before me may have mentioned it. I also have like 4 credit cards. 2 of them I have just put away. Do you recommend, like, how long? I haven't used the 2 in some time, over 2 months. Do you recommend using it, just making a little purchase every 3 months, or how does that work?
Yeah, I usually tell people at least every, like, once a quarter, even twice a year, because what you don't want them to do is reduce your limit or close the card or account on you.
Yeah, especially if you just recently paid off an installment loan and you weren't seeing the points that you were hoping for, right? That's where you're going to utilize that longer standing credit history credit card. Just like I said, buy a shirt with it and then, pay it off. And you should really see a spike in your scores.
All right, great call. Definitely. Lots of credit information out there. 248-539-9797. Charlie, one more call here. Do you got a call on credit or something different?
Credit.
Credit. Let's go for it, Charlie. One more credit call. Go on, Charlie.
I was calling. Unfortunately, I tuned in at the end, so I apologize about that. But I'm in the process of building credit. Unfortunately, I came from a household where I wasn't really taught about credit. I'm 41. I don't really have much credit, and I had a couple things that were put in collections that ended up on my credit. I've started paying those off, but I could only get a secured card at 41, and it's for like $200. So I'm trying to figure out, what do I do to build credit faster, because I kind of need a car, and I just want to get it right.
So you know what, Charlie, I think what we're going to do, if it's okay with you, we're going to actually call, and there's analyzers and what if simulators that we can utilize specific to your history, because it sounds like you had a little hiccup in the past. We'll be able to know how long it might take, what other things that we can do specific to your scenario, and figure out what we need to maximize the points for you. And I think
sometimes paying off a collection isn't enough.
We paying off a collection doesn't impact your score right away.
Yeah, we got to almost expunge it, and we will call you after the show to tell you how you can do that.
Yeah, because paying off when a collection hits your credit report, it affects your score literally for 5 years, but it's
very significant.
In the beginning, it's weighted. So when it first happens, it's really going to hurt you. And after about 3 years, the last 2 years of that 5 years has more minimal impact. But paying it off does not change your score. It's the fact that the collection even happened that created that impact, that negativity. So there's other things that we can do to offset that, or sometimes even get it removed. But we'll definitely reach out after the show.
We get families approved at 580 plus. Correct. So again, you need a mortgage and you've got some lower credit scores. Call us at Capital Mortgage Funding, 1-800-LOW-RATE. We offer every single program. Let's see if we can help you get that first house and
then
get that strong approval.
Credit, we will send you over to someone like Hope with lots of experience, and she's going to help you find the perfect house.
Yep, it all starts with the conversation like we're doing right now.
So easy. Hey, guys, what about...
Guys.
I love the call. Thanks for calling.
We'll talk to you soon.
Good stuff. Definitely on the credit thing, again, if you just had a Chapter 7, we heard from one of the callers, might have just had a Chapter 7. Yeah, hang on to those additional lines of credit. It takes credit to build your credit score up. That's the real key about it.
Yeah, just like it takes respect to get respect. It's
takes
the
money
same
to make
thing.
money.
You got to respect that credit card. You got to do it. You can't just use it and abuse it. You got to make sure that you are being vigilant with your scores and how you're paying these down. And just because you have that, it's not free money. You definitely got to make sure you're maintaining it, you're paying it, and you don't just let it sit there, because then your credit score is going to become stagnant. And then, when you're ready to make that purchase, whether it be a car or a mortgage, you're going to really see like, oh crap, I need to, fix this now. Right. So.
Credit's so important too, guys. It helps you rent a car. It helps you with all sorts of things. Your
insurance,
your homeowner's insurance is going to be less money. They look at that and they say, hey, wait a minute here. we might not need to give you a little bit higher because you've had some issues in the past. So definitely credit, a huge piece of home ownership. Start while you're young. Call us at Capital Mortgage Funding. We have no trouble running the simulator.
Yep.
The simulator will tell us what you need to do to improve your credit scores, saving you money. All right, we're up against a quickie here. 248-539-9797. We'll come back with all your calls. Boy, oh boy, are we back already? 9:42 if you're just joining us. A lot of fun giving you the Hardcore Mortgage Real Estate Business Show in our 23rd year. Harvey Free, Becky Alley, Lisa Lawson with Capital Mortgage Funding. Again, we make home ownership a lot of fun. Come and join our show. We appreciate all the calls. Credit's always a very interesting topic, as families need to have credit to build your credit. We'll show you how to get over the hump on that. Lisa mentioned secured credit cards. There's also a lot of other things. Let's sort of circle back there to the most important stuff out there, sort of buying and selling of real estate. Hope Williams, which makes it so much fun. Yes, we talked about it earlier that people are now defining their spaces. Maybe the open concept is on the back burner for a little bit. I remember one of my last homes had both an open concept living room and all that, but then of course several rooms in the house and things like that. What do you see right now? Is it just a matter of maybe getting that outdoor space was real popular during the pandemic?
And it's still popular. That is really a big deal for people, especially if they have kids. They want to have the ability, and if especially like the newer first time buyer, and if they're just starting out and they're expanding their family, they need an outlet. Now, kids don't go out as much as they used to in the past. They didn't, but post-pandemic, I think there's a new world that kind of opened up, right? Mm-hmm. And so we have, many options here in Michigan. We're in Michigan, guys. We have so many different seasons. Mm-hmm. We have the snow season. We have what we're in right now, Halloween, right? Yeah. And so you want to have the ability to decorate the home. That is by the way, my favorite part of the
And what
year.
you're saying, though, too, is like, you're right. The generation that now versus our generation, like we were out in the streets, we were riding bikes, like the street lights were our, like, it's time to come home, right? If I wasn't home by the street lights, I was getting in trouble, right? Because we didn't have phones or whatever, right? Where kids are not going out as much. They want, and then if they do, they want us as the parents, like right next to them, which is whatever, it's fine. But the outside space is like, because we're creating that for ourselves, we want to be the hangout house, right? We want the kids to be at our house. We want to know where they're at. If they are going to be, hanging out at someone's house, why not be at our house with all their friends and they feel comfortable and we feel safe? So you're absolutely right. I feel like that outdoor living space and that whole just good atmosphere that where your kids are at. And if they're going to hang out at someone's house, they might as well be at ours.
Yeah. Not even kids, though. I mean, your entire family, especially now that we were talking earlier about extended families and generational living. I think as baby boomers continue to, come to the age where they're closing in on retirement if they haven't already, unfortunately, not all of them can. There's been a lot of volatility in the market in the handful of years, the past couple decades. Right. And some of these baby boomers aren't able to retire and, live successfully on their own, financially independently, and so they're moving in with their kids so they can live as a generation. And I think that's becoming more and more common, in finding the right agent to find the right house to help that make us a successful transition. Because I love my mother, don't get me wrong, but I really would prefer not to live with her again. And I love her, like we are best friends, but I mean, still, it's different. You know,
the boat. She can live in the boathouse, like in the back
but
of the house. Okay,
there's homes,
close
right,
enough.
that they've got. I forget. There's a name for it. Where there's
I like to mention the bungalow. We're in Michigan, right? And the bungalow here is really, really a great option
because you're on a different floor, right?
Yeah, because you have a different floor. And if you look, I'm a big HGTV watcher. I like the different episodes, and if you look, they're really popular right now.
Yeah, but I mean, there's ways to generate.
Where they're millionaires and all they do is collect peanuts for a living or something.
Right.
Go there, Beth.
3 peanut shells and whatever, and then and their budget is 1.9 million.
Yeah.
All right, let's go there. Location and school. Schools mean a lot. Sports.
Yeah.
We're on a sports station here doing the mortgage real estate show for several years now. What's fun is like last night's football games, and let's just go there a little bit real quick. Martin Luther King rolling over some people. Celine took it on the chin from Bedford last night. All our high school football listeners out there. West Bloomfield rolling. Again, these are different cities. Rochester Adams with an unbelievable team. If I didn't mention your squad out there, give us a call. But hope
it's homecoming season too. Yeah.
Homecoming season. I know. I love the marching bands. Isn't it a great time? Go pick your city. Go to the high school football game and feel like you belong, and that's where you do belong. Yeah.
Community, and that's a big deal. Paying attention to the community that you want to be a part in. What is the vibe there?
Yeah, I'm all about that vibe.
And if you like the hustle and bustle, downtown Royal Oak is for you. If you want to be a little bit more secluded, maybe the Milford area, going up a little bit further that direction. It's all in what, when you're choosing a home, you have to think about all the things that go to it. How far do you want to be from the stores? Do you want to be in a high traffic area?
How far you want to be from your job?
Exactly. Oh yeah, that's
Can
a
you
big
be
one.
remote? Do you have to be back in the office
That's
again?
a
Like
big
all
one.
these things are changing again.
Yeah.
For me, that was huge. I didn't want to be over 15 or 30 minutes away, right?
Me either, but here I drive an hour. It's okay.
Somehow you do it, but you love it.
I
when
love
you
what I
pull
do.
up. Yeah.
It's totally worth it.
Definitely the modern look is here in Michigan. They did all this stuff, and again, always trying to figure out what state is trying to pick up what style of homes. But
it's always changing though. It's like the gray,
I like that
then it was
minimalist.
it's like the grays, then it's like the whites and the warms floors, and now it's like open concept. Now it's like closed off. I mean, you gotta really at the end of the day, you gotta go what's for you, right? And if you're a trend, finder, whatever, I'm all about this setting a trend myself. So, it's all about just finding what suits you and your needs. And sometimes if you're in a position, it's not right now. You got to think about like you're buying right now, looking at where you're going to be 5 years down the road. And it might be a temporary moment where it's a little bit tight, but at the end of the day, I feel like in those situations, the atmosphere kind of opens up in the universe and things just work out.
Well, to piggyback off, you were saying you got to find out what suits you and your needs. You can't do that when you're renting and you're paying someone else's rent and you can't paint the walls.
Preach.
You know what I mean? So get your credit fixed if that's an issue. If it's not an issue and you're just scared to take the first leap, give us a call. If you think you need gobs and gobs of money for down payment to get into a property, that's not the case. There is multiple. We talk about Michigan a lot, but there are so many other programs. The Chenoa Fund. There's a lot of local
National
programs.
Faith.
National Faith Home Buyers is a down payment assistance fund. City of Pontiac has one. City of Port Huron have one. There's so many programs out there. So if it's money that's keeping you from getting in, give us a shout. But
or fear.
Yes, fear. And that's what it is. A lot of it is fear. People don't make the call because they're like,
They don't want to be rejected.
They don't want to be rejected. I thought I needed more money. I thought my credit had to be, I didn't think. You don't know unless you try.
Yeah. I had a quick conversation with someone and I said, I'm going to look at everything. I go and I'm going to probably answer questions that you have and maybe some that you don't have. But it all starts with me being able to look at it so that way I can get something in front of you. And then it's going to make a little bit more sense. And they're like, okay, great, let's do it.
Right.
And those are the best kind of conversations.
Yeah. And I had one last night that I was in the office kind of late last night working, and I had one and they really want to move and they have a lot of need to move. And the reality is it's heartbreaking when we have to say no. And and it happens. And the answer to this person was not right now.
Not right now.
But here it is. I outlined a plan. This is what's affecting your situation. This is how we improve the credit aspect. This is how we improve the debt to income ratio aspect. And this is how we're going to get it done in the hopefully near future. So even if the answer is no right now, like Hope's name, we try to instill hope and give people a plan so they will be ready in the future.
If it's not now, it's when.
Right.
Exactly.
All right. We're going to get into all of that. Let's go to the call, and we're going to jump back into the house itself. Let's run out to Mike. Good morning, Mike. Thanks for joining us. You're live on the ticket.
Hey, Harvey. Good morning. How are you?
Good. What's happening, Mike?
Not much. Got a refinance question. I know it's a little off topic.
No, we like it. We like that one.
It's very in vogue still.
So I bought my home 8 years ago. It was an FHA. Only put 3.5% down. 30-year fix at a 4.75 rate. My question is, would it be a good time to refinance? I know the rates are a little bit higher, but my ambition is to eliminate the private mortgage insurance and attempt to shorten the term, either down to a 10 or 15 year.
Mike, are you my past client? Because if it is, I'm crying over here. I should have already refinanced you. Yeah, the last 2 years have been, the best 2 years in a long time to refinance. Well, it's not going to say that you don't have an opportunity now. But yes, Becky, boy, did Mike had that opportunity there to probably get, in the 3% or even lower, and again, get rid of the MIPs, got mortgage insurance premium, getting rid of that.
Yeah, but I don't want to focus on the shoulda, coulda, wouldas, right? Let's focus on your situation right now.
Shortening the term.
Yeah, so if you're looking to shorten the term, then yes, I do think that it's worth it looking at, because then you can still maintain a rate that's still historically low. You'll be able to drop that PMI and, kind of do all the things that are going to put you in a bit better position if you're paying this this unnecessary amount for PMI because your credit's improved now. The FHA is always a good vehicle to get you where you're going, but it's always that, it's ultimately that temporary vehicle, more times than not. So I do think that it would be worth looking at for you. And it's situational, right? Does the payment increase? Right. Is it something that you can afford? Are you comfortable? And if not, then we'll just write it out a little bit longer. But
about 2 more years.
Yeah. I mean, so
I'm definitely in a better financial position I was 8 years ago.
Mm-hmm.
So I'm not worried about a higher payment or necessarily a higher interest rate. I don't really need to cash out anything at this time. I know there's plenty of equity in the home.
All right.
I am your previous client, Harvey. You set me up with this mortgage 8 years ago.
Shame on me for not beating down your door to refinance the last two. And don't you get those emails? Anyways, Mike, I'm going to follow.
I emailed you a couple months ago.
All right. We're going to refinance that house for sure.
Yeah.
All right, we'll look at a 10 and 15 year. We're going to knock that
maybe
payment out.
a couple months ago it didn't make sense, and now it will. So we'll definitely give you a call after the show. We'll take a look at it because it's all situational. People are refinancing right now. I have several going on right now, whether it was cash out or they're doing what you're talking about, where they're dropping the PMI, shortening the term. So it's all just about what is working for you and your personal plan. So thank you for definitely calling us.
Great stuff, Mike.
Okay.
Thank you for joining us. Appreciate it. Definitely, whether your mortgage is an FHA, whether you have a VA loan, a USDA loan, whatever type of mortgage you need, call us at the office. Capital Mortgage Funding. We offer every single mortgage program available. I can't think of one that we don't offer. The 7 and 10 year programs based on the secured overnight funding rate. That's right, folks. There's an index and a margin. I don't want to confuse the mortgage brokers out there, so we'll leave it at that. Definitely give us a call, 248-539-9797. A few more minutes here on housing and making that house right. If you're selling your house, again, make it any color you want and put that fancy wallpaper and everything. But when you're selling a house, some of these more toned down things or what's more in trend is definitely the way to go.
Hope and I are looking at each other with that secret. Yeah, well.
Go ahead.
That's a really good point.
Secrets don't make friends.
That's a really good point. I've had past clients, and Lisa's aware of this, where it's a beautiful structure. It has everything basically that the house may need.
Good bones.
Good bones. Thank you. But maybe some of the color choices may not fit everybody. So I always recommend, instead of going to the more vibrant colors, stick with more of the monotone. I don't want to use the word monotone. Neutral tones that will be appealing to more of a broad base of people, right? Because what happens is you want your new buyer to walk in and be able to feel the environment for themselves, to see themselves in the house and see what they would do to make it their own. And since we're hitting into the seasonal time frame, no Christmas trees while you're trying to show your home. I know that, everybody likes to celebrate, but if you're going to sell your home, try to tone down a little bit of the decor. Just a little bit. If you're going to have a tree, just make sure that it's not in the path of the buyer where they have to walk through and they're not able to really, really get the full effect of what it would feel like if they were to decorate.
Cancel that 40-foot tree, folks. If you're selling the house, maybe keep it packed away and don't show up the White House tree.
Yeah.
If your Christmas tree needs a semi truck to bring it to your house, maybe it's too big.
Or maybe it might be a celebration. Maybe someone because people love Halloween.
Right?
Maybe it might be just like the thing. Maybe that's it. I like this vibe.
You never know, right?
That one buyer, but I'll tell you.
What about the fuchsia wall? I feel like that might be like.
Well, I think that's what she's saying. I mean, you want people to walk in and picture their life inserted in that property, right?
Yeah.
And just like they tell you, I remember a long time ago when we sold our house, they're like, take down all personal pictures, no family photos. And I was like, what? I'm like, what do they care if my wedding photo's up? They're like, they won't be able to see that their wedding photo will be here, or whatever pictures they want.
Be like, good,
And they
because
take-
mine's in the place setting of
Right.
theirs.
Becky, your
That's
house
what
is
they
like looking like Bronner's or something. You know that
That's what
place.
they say, right? So you want to be able to have that person
And over
inject
here is
their
the
own
disco
life.
ball ornaments.
Inject their own
And look, I
fun.
love the holidays myself, but I will tell you one of the examples, and maybe the reason I may be a little bit more on the extreme of this is we had at our brokerage, not myself, we had one particular home that stayed on the market for so long, and we realized it's because the people kept their Halloween decor up year round. Skeletons in the yard. You can't do that when you're trying to
They
sell.
love it. It's
You
their
can't do
favorite
the
holiday.
Yeah,
right?
the
Favorite
365 hot, like Christmas lights. You got to take them down in the spring. You got to
Becky,
do it.
Nothing like a cemetery in front of your house, right?
Right?
All
All
year.
kidding? There were coffins out there.
Hey, what's wrong with that? It's like the Munsters.
The monsters. I mean, we all know you all have we've all seen the neighbor where they have the 365 Christmas
Oh, yeah.
lights up, right?
Uh-oh.
It's great to put them up, but you don't want to take them down when the weather breaks. Get up there, hire someone to do it. We got the Hire It Done show before us. We'll find someone that can put take down your lights.
Great stuff. Hope Williams, thanks for joining us. Keller Williams Advantage.
Thank you.
Great agent. Get in touch with us. We'll get you in touch with Hope Williams again. Hope Williams, Keller Williams Advantage. Just Google it. Her name will pop up. She's a great agent. For Lisa Lawson, hey, what a show, right, Lisa?
Yeah.
It's always the fastest hour in radio. And Becky, do you have anything last to say? A wonderful day out here.
Listen, it's a beautiful day. Get out there. It's homecoming season. My daughter, we're going to take pictures today.
Oh, cool.
So it's that time of year. It's fun. It's beautiful. Enjoy your time with your family, and let's get
right.
you into a house.
Pat Caputo with sports. And we got Michigan football coming up. Keep it here on 97.1 The Ticket. We'll see you next Saturday.